Welcome back into another podcast. Today, we're going to be breaking down something that you guys will want to listen to. And that, of course, is this whole idea around a massive shift in traditional finance and traditional investing. So we wanted to bring in an expert, Sandy Kaul, coming in from Franklin Templeton. How are you?
Great. Thank you so much for having me today.
So you have been very busy. You guys put a great report out here recently that basically was Tradfi meets DeFi and was the concept. We'll share the report or a link to it so you guys can go over and get the whole thing. There is so much in this report that we're going to be breaking down today, Sandy. One of the things I want to lead off with is this $44 trillion shift. So this is all the 401k business. What we've seen in this thing that I think you call the stool, the three-legged stool, which is pensions, Social Security, and savings.
Yeah.
Explain to me why that is a broken stool, especially in this macro environment.
Yeah. So, we really put into place a three-legged stool in the 1980s, coming out of the 1970s, and we strengthened it through the 1990s.
Yep.
As you said, the three legs were you got Social Security from the U.S. government, your workplace paid you a pension, so an occupational pension, and then you could contribute to your own investment savings for retirement at a tax-advantaged status. In putting those three stools together, those three legs of the stool together, we set the baby boomer generation up for a really solid retirement, right? All these baby boomers are now retiring. They had the advantage of this three-legged stool. They had the advantage of rising home prices. In addition, and we see a very wealthy, in fact, the wealthiest generation in history is the baby boomer generation that is now retiring. The problem is we also created along this way this idea of a 401k or a defined contribution plan.
Right.
And so we have seen a massive shift in the market away from a defined benefit pension where your workplace pays you the pension to you basically contributing your own pre-tax dollars to invest for your own retirement. Right. So that whole occupational pension is really not available to the majority, particularly of private sector employees. And the 401k or the defined contribution plan that replaced it is voluntary.
Right.
Many employees have not chosen to participate in that plan. So for many, that stool of the leg is gone.
Right.
Then you have your individual retirement savings. And we know that savings is a very challenged practice here in the U.S. that many people don't even have emergency savings, much less savings to really be putting money away for retirement. So that leg of the stool is also wobbling. And now we're hearing more and more about potential insolvencies in Social Security. So
right.
The whole idea, and I have this three-legged stool that sits underneath me that's getting me ready for the end of my working life, is really disappearing. And a lot of people today, we're seeing changes in behavior that are driving them outside of the workplace, so they don't even have the option to participate in these defined contribution plans. So we're really in a tough situation right now in the U.S.
I was looking at some of the data. Social Security trust funds now projected to be depleted by 2035. That's 10 years from now. So think about you guys that are listening, ladies that are listening, 10 years, add that to your working life. And then look at those that are younger, let's say in their 40s.
Yep.
That might work till 55. They're completely out of the system by then, most likely. And what we're dealing with now, especially to what you said around the 401ks not necessarily being available, this is a thing that we talk about a lot, is that assets, I don't know if you saw the clip from Scott Bessent where he was breaking down the percentage of Americans that own assets.
Yeah.
It was 80%, 90% of assets owned by 50% of Americans. So the bottom 50% of people in the United States don't even have an asset, not a stock, not a bond. So this is a critical scenario that is playing out right now in the United States. When you look at these numbers, specifically the solvency cliff in the mid 2030s, why is the industry still doubling down on this? Why do you think we haven't seen massive change in DC?
One of the issues that we have is that the regulator for retirement accounts is the Department of Labor, whereas the regulator for investment accounts is the Securities Exchange Commission. So you have a regulatory split that requires cross-agency cooperation, and that is oftentimes hard to do in DC. I think also, there's not any ideas on what to replace this system with, right?
Right.
It will probably come up with some sort of fixes for the Social Security, but we have really built our retirement system around the occupational pension, right? That I will get my pension through my workplace. And we're seeing huge changes in the pattern of work, right?
Yeah.
More people are doing gig work. More and more people have side hustles.
So much more. Yeah, it's huge.
Have multiple employers at this point. And so fewer people, and people are staying in jobs a much shorter period of time. So fewer people are even qualifying for these defined contribution plans. So where the defined contribution plans exist and where people are offered them, there have been good improvements. And that's where the regulatory efforts have focused, really created this like auto enrollment, this auto escalation, so that if my workplace offers me a 401k plan, I have to opt out now instead of opting in, which is making it better coverage for the people who are in those organizations. The problem is that not enough people have that option.
Right.
For the people outside that system, the options have been very limited. And this is where we're seeing innovation step in. We're seeing new players like Robinhood coming in and offering retirement savings products and offering to do a match on those products, which is completely
huge
new model, right, than anything we've seen before.
Well, and I think to your point is you're seeing a new revolution of investor. And I would say that it's probably because we hold these wealth seminars, usually about 100 people plus are in these, and primarily it's business owners and high net worth individuals. But I would say right now it's 55 and below. There is an audience, I think, for what seems to be occurring around the younger investor today. And to your point, it's really drilled in on that. You also had a section in your report that was kind of the crypto pivot. And it was really talking about the idea around a wallet-based world. So distinguishing obviously between standard wallets, digital wallets like an Apple Pay or something like that, but going to a crypto wallet, whether it's self-custody or online or in an exchange where you hold the keys, you state that wallets are likely to displace accounts entirely. Yep. Are you talking about bank accounts, investing accounts? What are we talking about here?
All of the above, right? So today, everything, right? So today, if you think about it, how many accounts do you have? I have a checking account at 3 different banks. I have savings accounts at 2 different banks. I have an investment account, a brokerage account, a retirement account. I have several brokerage accounts, actually, because I might use different platforms. And for me to put together a picture of what is my net worth, what is my wealth, that's tough. That's very hard to do. It takes a lot of effort. It takes a lot of work, right? It's hard to get advice and look at that as a holistic picture.
Yeah.
And don't forget, every time that these accounts are at different organizations, if I want to transact, I have all these different ledgers that people have to update.
Okay.
By moving into a wallet, right, all my assets become concentrated in one container, right? I can see every asset I own, my operating cash that would normally sit in my checking account, my emergency and savings cash that would normally sit in my savings account, my investments, titles to assets that I own. All of this sits in my wallet on a blockchain ledger. So it is a distributed ledger where everyone who needs to can see a copy of what's in my wallet if I permission them to do so. But for me, as the owner of that wallet, now all of my assets are together and I can start thinking about how do I optimize them. I mean, just a super simple thing. The money that sits in my checking account, I'm not earning any interest on today.
Right.
If I had that a cash in one wallet aggregated with all my other cash, I could sweep my cash every night into a money market fund and get the interest overnight, just like an institution does. But that's hard for me to do today as an individual. So having a wallet is going to give me as an individual much more control and much more visibility over my assets.
I want to hit on 2 points that you kind of alluded to. One, the centralization siloed. You think about right now the future, even if you had 401k, which is you're right, it's an account over here, but imagine that in a more of a tokenized asset. All of this playing into obviously within the blockchain. Is there a concern from an attack vector side of things where we are centralizing too much in one place, number one? And number two, are there any potential privacy risks that we could be facing? Because we all know blockchain's wide open. If you have someone's wallet address, you can see all their transactions. What would you say to that?
So I think these are very important questions that people really need to understand, right? So first off, the record of your transaction is what sits on the blockchain.
Yes.
Not the assets themselves, right? The assets themselves are in a protected, cryptographically locked wallet, right? That only you have the private key to authorize the opening and closing of that wallet to interact with the transaction, right? So if I had your wallet address, I could see what was in the wallet, but I could not in any way, shape, or form interact with those assets unless you gave me your personal key.
Sure.
It's very hard to steal that key because it's not really a key. It's really a algorithmic code that is broken up into many pieces that are constantly being cycled through separate algorithmic scrambling techniques. So the odds of someone being able to reconstruct your key to use it against your will are extremely almost nothing. And there's moreover starting to be more and more professional custodial services that will manage and take insurance against managing your key for you. And so you're going to be able to trust those services. It's just like today, I may not understand how the wallet that I use when I use something like PayPal or Venmo operates.
Works, yeah.
I trust that it works and I trust that it's secure. It's going to be just like that with the blockchain-based wallet.
Do you think we'll see companies like you guys, Franklin Templeton, where you guys are going to make these kind of services available to customers?
We're already getting inquiry from our customers. We developed our own proprietary solution that we built in conjunction with the SEC. And because we've been operating for over 5 years now with this wallet-based system here within Franklin Templeton, we've been able to show 100% control over these apps. So we're getting them right already, right? It's because I think that people are starting to understand how much of a benefit having assets in this wallet is going to be.
Well, and the fact that you see this dynamic shift occurring of where people are starting to allocate funds to their new three-legged stool, which could be everything from digital assets, ETFs, possibly stable coins, or even if you want to go outside that and go into gold and silver. Those are obvious reasons to kind of see this explosion that could happen. Speaking of ETFs, I know you guys, of course, just entered the ETF market with XRP. This is a massive signal, I think, for a lot of institutional validity, especially for XRP in general. But I want to pivot to that a little bit and talk about that because you guys are shipping a product now with, what is it, XRPZ? Is that the tag? Okay. So this is available now. A huge validation for the XRP ledger, what's going on with XRP as a whole. This has been a little bit of a fee war, though. You guys came out with a very good aggressive fee. I think it was almost 0.19%. Explain to me how it's going so far.
It's been great. I mean, look, we are a partner to the Ripple organization. We're working with them in many ways. We see the value that they're creating across their whole ecosystem, including the XRP chain. And so we think that, we have an investment team and we run funds that are actually investing in coins and crypto. This is one of the investments that we've favored. We think being able to offer it to clients in an ETF is important. We've also added it to our Easy Peasy, which is our multi-coin ETF that has now 8 different coins in it. And XRP is actually our 4th largest allocation in that multi-coin portfolio. So we're really able to bring our investment conviction about the chains that we think are going to really be instrumental in creating this new industry infrastructure. This is what gets represented in our Easy Peasy product, and that is what we're able to offer to clients to give them either diversified exposure, or if they want an individual coin like XRPZ, they can get into the XRP ETF individually as well. And that augments the ETFs that we have already in Bitcoin and Ethereum.
Well, that's kind of of the question I have is we have talked to a handful of fund managers that have launched XRP ETFs here recently, all of which have been very successful. Do you think we're at a phase now where the institutional validity that's being put out there within Wall Street, along with the demand that's coming from both institution and retail, has this started to step XRP up to the level of what's happening in the Bitcoin and ETH ETFs?
I think that we're moving in that direction, right? I think that there is a very interesting story playing out around stablecoins. XRP is one of the only chains that also has its own stablecoin, right? The RLUSD. And I think that that adds a new element to what they might be able to do in terms of building business around the chain. Don't forget, I think one of the most exciting prospects of these new rails is going to be the vast increase in the number of computer-to-computer transactions that are going to start to occur as we see more people get comfortable with Web3 models, right?
Yeah.
And so I think that, when you have your own stablecoin and you've got this chain that is already a public chain that has an independent verification network operating around it, this starts to become, I think, a pretty interesting business case, which is why we've been looking to partner with and doing more with Ripple over the last couple of years. Don't forget, they had some challenges here in the U.S. while that lawsuit was on.
Sure.
And outside the U.S., they've been continuing to build their business dramatically. We operate globally, so we've been engaged with them in Asia for some time, and now we're seeing that start to spread out to more regions of the world.
Sandy, you're kind of alluding to this agentic idea because we've had robo-advisors for a while.
Yeah.
Now what you're talking about is autonomous AI agents that can act as almost a fund director in essence, looking at what your current situation is. It customizes to what you need and are looking for in terms of goals, and it's going out there. How far away am I from that right now? If I wanted to open up a Franklin Templeton account, would I see possibly agentic AI in Franklin Templeton in a year?
Maybe. I hope.
Maybe.
Yes. But you're seeing it in life, right? Like we had the announcement a few weeks ago from ChatGPT that they're integrating Agentic AI into their ChatGPT app. So if I'm telling my ChatGPT, hey, look, I want to book a vacation to Switzerland and I want to book 3 of the best restaurants in Zurich while I'm there on these dates. And, I'd like to also book a tour. My agents can go out and automate all of those transactions and execute them, right? They don't need to come back to me to check it all. Or they could come back to me and say, here's the execution, here's the transactions I'm going to execute. Do you approve? I can set it up to work in either way. But what's going to happen increasingly is that this is going to be getting done on my behalf.
Right.
Similarly, we think that there's an opportunity to optimize the way your investment portfolio works in the same way, right? That, the markets are moving and I've had a hedge on to protect my downside. And now with the correction is nearing its conclusion, my agents of AI can go in and start to wind down that option position for me and exit it so that I am then back fully exposed and no longer limiting, where the market might turn. Right. So I think that you're going to start to see agentic AI work its way in to help manage portfolios. Right. Yeah. It's going to be because things are going to be moving so quickly and operating 24 hours a day, 7 days a week. It's not going to be possible for a human to constantly be monitoring your transactions or your portfolio.
No doubt. Well, and what is your opinion of what's happening right now in terms of, I won't call it yield farming, but in essence, you're taking DeFi today. You look at the announcements of Aave, which is almost becoming a bank that's paying fairly significant yields on something like an RLUSD. And then you have all these other competitors come to market. Now you're going to have pretty much a shopping spree for your AI agent to go out and say, okay, listen, I'm setting on X amount of stable coins, X amount of XRP. I want to put it to work.
Yeah.
Do you think this is going to be able to be on autopilot in the next 12 months, the next 18 months? What's your forecast of when this could actually be there?
I think it could happen. I think 12 to 18 months is a reasonable time frame. I think that, the piece that we still have to understand is where is the line of comfort, right?
Right.
Where are you comfortable letting these AIs operate independently without needing to do that check-in with you versus, can you set certain rules? And as long as it's within those parameters, I think these are the issues that we're still trying to work out with these new technologies is the conditionality. A smart contract is a smart contract. executes or it doesn't execute. The goal in bringing agentic AI into the process is that there can be more nuance in the conditionality, but we still have to find what are the right lines. And those lines may look very different for you and for me, right? We might have different risk tolerances that we have to be able to tune the AI agents to be able to follow.
But we're sitting at a demographic divide right now because you have mostly boomers that have been in a position where they're starting to trim down their risk exposure. You have Gen X like me. We're still very active in the market and our risk tolerance is very high. And then you have millennials and even Gen Z, which is, I think you call it this, what is it, like the slash worker group.
Yeah.
This is a real demographic shift. And wouldn't that group be much more willing to just pull the trigger on something like this?
100%. And that group has really shown a very marked shift in their wealth building pattern.
Yes.
Right? For your generation, my generation, we've been really, you had an investment portfolio to save for retirement, but you built your wealth through getting into the property ladder.
Yep.
That is really becoming out of reach for many people. We had an amazing stat the other day come out that $2.3 trillion has moved out of traditional banks into financial apps and open banking apps, right? So
it's only going to get bigger.
Right. And this what our younger people really feel their pathway lies to build wealth for their own future. So anything that's going to optimize that pursuit of wealth building, I think is going to be viewed very positively by this cohort. And I think they're very excited about the pace of innovation that's coming out, right?
Are you at all worried about when we get Clarity Act through DC? This changes really the rules of the game for a lot of companies, including yourself. I mean, along with every other investment category out there on Wall Street. Are you at all worried that we could see a flight to digital capital moving out of the banking system and outside of maybe the top 5 banks? Could we see a lot of bank failures? Do you feel that this is a problem?
I think that, banks luckily have the FDIC and they have a lot of other layers of protection, but I think you could see a lot of bank consolidation. I do think that
roll-ups.
Yeah, roll-ups, consolidation. I think that shift towards more independently managed and independently driven kind of personal finance is going to be a lasting change.
Interesting.
Banks are going to have to learn to operate in that new era. I mean, I think the Clarity Act, if it gets passed and when it gets passed, is going to really open up the digital channels even more because right now, there's still prohibitions about distributing traditional investment products through these channels. Once you can start to get some traditional investment products into this wallet-based ecosystem, you start to diversify crypto profits that many of these younger investors have built up.
Huge.
Gives them even more ability to build wealth for the long term. So I think that, we are seeing a pivot in where the financial ecosystem's moving, the rails that they're going to be operating on, the model of how it's driven. But I think there's room for everyone to compete in that new model. You just have to, understand the shifts that are happening and stop trying to preserve an old model that might be fading away. It's all come to, can you embrace innovation?
Well, I think we've seen this in a variety of, sectors out there, everything from retail to tech to travel. Now banking and finance are basically at the altar, so to speak. There is a major shift here, and you're dealing with money, so it gets into a whole global macro component, which is even more powerful, I think, in some cases, which has really started to accelerate even our channel. I mean, we've been growing like crazy. The amount of people that are trying to learn about this massive change that's underway. And I think they're starting to get it. Are you finding that from your clients right now where they're coming to and saying, hey, I get it now. I'm ready to start to go in this direction?
100%. It has been, the last 6 months have been almost like unbelievable in terms of the tide that we've seen. And I think that people are finally starting to understand that these are not dangerous technologies. And technology is technology. Right? How you use it, how it's regulated, how it builds protections in. These are the things that we should be concerned about. And these are the areas where we're finally making progress. And now I think that's giving people the confidence to start to separate out a little of the very early years of crypto and some of the issues that were evident in a system that was being created out of nothing, right?
Yep.
We've had 500 years of building the current monetary and banking system, right? They created a system in crypto out of nothing in just a few years. Of course, there were going to be some hiccups in the beginning, but they have been amazing. I think the digital natives have been amazing at working through the issues, addressing the vulnerabilities, coming up with even more innovative and creative solutions. And that has really lit a fire under the traditional industry to really now take this step back and realize things are changing. And great opportunity with the direction that the technologies are taking.
Well, I'll tell you, we've seen a lot of Wall Street in the last 3 to 4 years really accelerate into this. Obviously, the legislation and the regulation wasn't necessarily in place, obviously, until we saw Genius get through. But now clarity on supposedly a good track to get approved. Hopefully, if it gets done early 2026, this could start to refit the financial system back to the point of what you guys are growing on. When you look at 2026 and beyond, Sandy, and you think about some of the products, I know you can't reveal all of the ones you're working on.
Yes.
But I'm talking to a lot of people that are coming up with some really good ideas of how to leverage this system. And it's really like an entire new blank slate of products and services that are going to come to market. What are you most excited about?
I'm most excited about 3 things, right? I'm most excited, number one, about democratizing the ability to use tools that have been readily used by institutional investors for decades, right? So being able to lend my assets and earn fees.
Huge.
Able to invest my excess cash and get yield every day from it. Being able to use margin or use derivatives to limit my downside or to accelerate my upside, right? These are tools that have allowed institutions to really outperform individuals. And now every individual is going to have this optionality in their portfolio and this ability to get advice and to be able to utilize the assets in their portfolio better. So that excites me. It excites me that we are starting to really open up this idea of liquidity, right? That these new models that you talked about, like saying, I have this liquidity, I don't know what to do with it, optimize it for me.
Yeah.
My liquidity should be an asset, right?
Okay, you just hit on something big right there. And that is because this is the problem we have right now. So much liquidity is locked up because people either one, don't understand how to make it go to work.
Yes.
Or two, it's too difficult to make it go to work.
That's right.
So this could really unlock a tremendous amount of liquidity just with the ease and speed to market in and out. How big of a liquidity unlock do you think that will be?
I think it's going to shock people. I do think that the most successful thing we're doing now, right? Everyone talks about stable coins as the killer app that unlocked the chain. Yeah. I think we've moved beyond that. I think we are now moving towards the creation of a liquidity layer on these new rails that is going to unlock, as you said, the potential of money as an asset class, different forms of money, different ability to use money. It's not going to matter. I'm going to be able to really look at the liquidity that I have and optimize it to maximize my buying power. We've always thought of goals of portfolios as being, accumulate as much asset, get me the best risk-adjusted return.
That's the old way of thinking, man. I'm telling you.
Thinking this is that you say maximize my buying power.
Yes.
Right?
Yes.
And so I think that's been one of the most exciting developments we're seeing happening right at this instant. And then the third thing that really excites me is all the new assets that are going to become a standard part of the portfolio, right. The intellectual property, the ability to really combine having an asset and an experience and a connection to the things that matter to me in my life and to the artists or to the contributors or to the creators that create that. This is part of what makes life fun to live. Right. And so we have this whole concept at Franklin Templeton that we call better living through investing. And that is bringing the potential to really bring the experience into the financial aspect of my portfolio as well.
Yeah. Well, and there is a layer right now where a lot of people are still educating themselves. And it's like what we tell a lot of the people on our show right now is that, listen, what you know about crypto investing over the past 5 years, you almost have to forget it all. Yeah, because what we're going to see in the next 5 years is not even going to look remotely similar to what we saw in the past 5 years. That was literally primitive caveman times.
Yeah.
Compared to what we are dealing with now, with a lot more structured capital involved. Obviously, we've got Wall Street in our corner. And of course, the biggest is regulatory environment that's much more favorable. So a lot of things happening out there. I'm going to be watching what's happening at Franklin Templeton. It sounds like you guys are getting ready to launch some pretty cool stuff. So when you do, Sandy, I want you back here on our show. Okay?
Yeah, I promise.
All right.
Thank you. This was a great conversation. I really enjoyed it.
Thank you so much for coming in today. You guys know what to do. Make sure to like and subscribe. We'll drop this one along with the report that we're referencing here, along with a whole bunch of other stuff in the edit for you guys. We will catch you next time right here on the XRP podcast. Take care.